it the actual underlying liquidity of a market, especially markets like gold. If I asked you, can you spot real liquidity on that chart? Well, the answer is, well, there doesn't seem to be any, because all the highlighted liquidity seems to be, well, nothing seems to be there. Does anybody see any real liquidity yet? Does anybody see anything that's got any value to me? Well, take a look at that bottom edge. Take a look at what's just appeared at the very bottom edge here at 1726. You see it? 1726. What is that? Real liquidity. Very high probability that it's real. It's the first liquidity we've seen all morning. 1726s. Mark the level. Mark the level. So when you see that level, look at what happens, guys. That real liquidity comes in. The first thing that happens is you get a buyer shows up straight away. And you think to yourself, wow, that's a bit crazy, isn't it? It's amazing how real liquidity works. That as soon as the real liquidity shows up, a buyer shows up almost immediately afterwards. And the price then tests into this real liquidity level that you've now got highlighted at the bottom edge. And what happens? Oh, that's interesting. A huge block print just traded at exactly the same place as we'd highlighted real liquidity, which if you typed it into the room, we would all know about. And the buyers come in here at this price at 1725.90s, 1726s. And what happened to the 1725, 1726 buyer? The price comes back and tests it again. The price comes back in and tests it again, and the price tests it again. And what happens? The price catches one bid, two bids, three bids, four bids away from that bottom edge. That's your day, guys, right there. That's it. That's all you needed to do. 4 trades, $100 each trade, $400 profit off that bottom edge price that you already knew about, provided by the market to you. And you can see the activity at the bottom edge again. You can see activity. There's activity there, and another buy trade for another $100, and another activity there, and another buy trade for another $200. Is there anything you want to confirm that this is not working for you? Well, where's the next real liquidity? Does anybody see any real liquidity showing up? Anybody see any real liquidity showing up, guys? 1730. So, do you think there's going to be a possibility of a trade at 1730s? What do you think? Do you think there's a possibility that there might be a bit of business up here? You've got the bottom edge, 1726. You've now got a possible top edge, 1730, which seems quite interesting because obviously we've got that big supply in the background. You can see that very, very fast candle, that toxic candle at 11:11 this morning, and a very, very fast, aggressive move away from that price. So this looks like a reasonable location to maybe get some short business. So let's take a look at what happens. The price spikes the 1730s, and the seller comes straight in, as if by magic, for $100. The price then sells off the 1730s like absolute boss that it is, for another huge gold profit. Where does the price go down to? That bottom edge, where does the price sell off from? The same 1730. What happens? Another big swing away from the 1730s. Come on, guys, wake it up. That's a $400 round trip from the bottom to the top, 400 from the top to the bottom, 400 from the bottom to the top, 400 from the top to the bottom. It's just 2 fecking lines is all you had to put on your charts to make $1,200 to $1,600 a contract. And still, you don't bother doing it. Another bottom edge, another buy trade, another $300. Another bottom edge, another buy trade, another $400. That's you over $2,000. Another top edge, another block trade, another sell off 30, another $400, another bottom edge, another buy trade, another $200. That's you at $2,500 to $3,000 per contract. $2,500 to $3,000 per contract by drawing in 2 lines on your charts. Just 2 lines. And you think it's too difficult to draw those areas, to recognize those areas of activity that we told you to do weeks, months ago, to make sure that you were getting the best information possible available on your screens. The line doesn't mean you're going to buy it or sell it. Of course it doesn't. But you need to know about it at least. You need to know these things. You need to know these areas exist. Well, what I suggested that you do, and Alan's been good enough to do it, 1 person out of 100, is when you see a line that you have an idea about, type it in the room. Put a bit of information in there about real liquidity. It doesn't mean it's a trade. It's just there's a bit of real liquidity for you guys to, if you haven't already recognized it, if you haven't already seen it, make sure you're aware of it. It's very, very useful information. It is obviously needing updated every now and then, so it's up to everybody to get on their screens to make sure they see this, but that's $3,000 of profits today on a single contract, at least $3,000 profit today on a single contract on gold rotating between 1726 and 1730. Just by drawing 2, the only 2 that show up, the only 2 key levels that show up through the filters. And it's the 2 levels that bracket the gold market perfectly for the whole morning session. Are they always as good as that? No, absolutely not. Is it still worthwhile paying attention to them every day? Abso-fucking-lutely. Absolutely.